Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Katie Jensen. Mortgage rates keep sliding down with the average for the 30-year fix now at 6.32%. Now that's 3 weeks of declines, and that's music to our ears. But how much longer will the band keep playing our song? Our own Mike Savino gets some insight in this edition of Ask an Expert.
People want to get in the game, but they're staying on the sideline.
Mortgage rates remain down from their early March peak, and as a result, loan applications have been on the rise over the same period. Originator Success founder Hammer Helmer says homebuyers have been especially sensitive to changes when rates for the 30-year fixed are in between 6 and 7.
They see that dip, they jump in on that dip. When rates go back up, all of a sudden everybody gets out of the pool.
So how much further will mortgage rates slide?
Not much at all, unless we get another black swan event.
Helmer thinks rates will stay in their current range for a bit, but one bad piece of news could lead to more volatility. Anything that scares investors away from mortgage-backed securities could cause rates to rise again, and that includes next week's jobs report.
If that data comes in and it shows the jobs market is, again, doing very well, then I think that we could see rates move a little bit higher.
With rates down, now is the time to get buyers back in the game. Buyers have accepted that we won't see a huge drop in home prices.
And we've gone through anger and we've gone through bargaining, and now we're finally coming to acceptance.
And if your customers want to wait for rates to come down, remind them experts agree it will happen eventually. So the chance to refinance will be there in the future, but their dream home probably won't.
Let's look at getting into a house at an affordable payment today and talk about what maybe a year from now, what that may look like for mortgage rates, or 18 months from now, and that when that's lower, we're going to take care of it.
For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. And we've got more good news for home buyers as homes became more affordable to start the year. Homeowners had to spend 30% of their income to buy a home during the first 3 months, down a point from the end of 2022. That's still above industry recommendation of a 28% debt-to-income ratio, but it's trending in the right direction as home buyers' paychecks catch up to home prices. Unfortunately, buyers are having a hard time finding homes. Listings had been picking up over the winter, but that momentum seems to have stalled. Inventory is up 60% from a year ago, but Realtor.com says that's actually down from where we were last month. Homes are also spending 21 fewer days on the market than their January peak. Coming up, federal regulators want to set some new rules.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. The CFPB has announced new data requirements for small business lending. And for most of you, the new rules won't mean any changes. Residential mortgage lenders already have to report data under the Home Mortgage Disclosure Act, and the CFPB didn't add any requirements. But the new rules could impact originators who work with property investors. These changes treat rentals and other income-generating properties as small businesses. The required data includes the cost of credit for loans, as well as location and demographic information about the borrowers. The CFPB is phasing in the rules, but by January of 2026, lenders that make at least 100 small business loans will need to follow the data reporting requirements. The MBA says the new rules will be costly and burdensome for lenders. Up next, single women are more likely to own a home than men, but they end up paying more for it.
Join us at Mortgage Star, where women come together to celebrate and raise each other up while creating connections that will last a lifetime. Attend Mortgage Star in New Orleans on July 10th and stay an extra day for the Ultimate Mortgage Expo.
Welcome back. Here's what else is interesting today. Women continue to grow their place in the housing market, but they're not getting the same benefits from ownership. Single women now make up 16% of home buyers. That ranks only behind married couples in terms of market share, and it's twice the share men hold. But researchers at Yale found women pay 2% more than men when they purchase a home, and they get 2% less when they sell it. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.